Welcome to Bitcoin Escape Plan. The topic of today's video is how stablecoins will change Bitcoin forever. This is a free preview of the paid newsletter that you can check out over at bitcoinescapeplan.com. It'll be up in a little bit. Once I'm done recording this video, go subscribe over there to get this over there faster than you can anywhere else. Anyways, let's start off these videos like we always do with the 4-hour chart for Bitcoin. So as you can see, in the last couple of days, including right into Christmas itself, we had one more attempt at these key levels that we were talking about all last week. So 90.4 was really the one that mattered most. We failed that on Monday, have been going down ever since, and really just been chopping, consolidating. And like I said in my 2025 prediction video, which was super late, I will admit, I didn't think the price was going to be above 94K, and that looks like that is holding true. We are nowhere near it. There's nothing really on the higher time frames that is communicating to us that that'll magically change. And at the moment, we are just looking to get back above this level so we can simply retest the same level again. But it doesn't look good at the moment. So I would imagine we continue to chop and probably are going to make another attempt down to here, closer to 85 than we are back to 90. But really, the year is coming to a close, and I think that the market is just kind of waiting, while we see what's happening with gold. Gold is at new all-time highs. SPY is at new all-time highs. So Bitcoin is just kind of the stepchild that's not getting any love or attention right now. And maybe that changes in a couple weeks, or maybe this is signs that we are already in a prolonged bear market. But the topic of today's video is really more about stablecoins than Bitcoin itself. Subscribe, let me know if you're enjoying these other types of videos that I'm making. So let's go over and take a look at DeFi Llama just to see kind of what is the story of the market cap of stablecoins. So stablecoins as they currently exist are overwhelmingly, Tether is still, the dominant one by a hefty majority. I don't know if this one shows. This one doesn't show the exact percentage, but if there's just over 300 billion, so 308 billion according to DeFi Llama, 186 billion of that is Tether itself. And the only other one that's even close is USDC, which is about 76 billion. And the market cap of USDC has fluctuated a lot over time. I believe that Tether is, more consistent with this one, where it's just pretty steady up and to the right. And then obviously peak of bear market, people are panicking. Demand is going outside of cryptocurrency at this point. It's moving into the other markets until it starts moving back in this direction. But as you can see, the shape of the chart is pretty clear that it's just going to continue to rise over time. So if we go and look at the Bitcoin market cap, it's very similar. It's a little bit more meteoric in the case of Bitcoin itself, but you'll notice a lot of similarities between the two. This isn't quite a sharp uptick. There hasn't been as much of an increase in demand for stablecoins as there has been for Bitcoin. But as I talk about in the newsletter, that's about to change dramatically next year with these stablecoin acts once they go into effect. Once JP Morgan Chase and Citibank are able to just print hundreds of billions of dollars of these stablecoins, it's going to dramatically change things. And I think it's important that we kind of we don't disconnect the fact that this market cap is going to continue to rise forever because they're going to continue to print dollars forever. And I'll get into that later in the video with the U.S. national debt and why that's the case. But specifically, if we're going to look at other assets, for anyone who's still wondering if we're going to experience an alt season, this is the market cap for Ethereum. And as you can see, it's also up and to the right, but it's a lot more volatile. And really, at this point now, we've waited all this time, 4 years, for it to just get back to the same levels that it was there before giving it up. Which, obviously, if you're investing simply in stablecoins, you would not have experienced as dramatic an expanse of your wealth as you would in something like Bitcoin. Like the price over here was like $15,000 per Bitcoin. The price over here, even in a downturn, is almost 90K per Bitcoin. So it's much, much different than the price of your dollar here is $1. The price of your dollar here is $1. The price of your dollar here is $1. So it's not that like the amount of money that you're going to have in your account dramatically goes up unless you're staking these. And most places you're not going to get like staking yields that crazy for USDC. Like not really in excess of what you would already get holding a treasury bill. Probably some things on chain that you can do, but even like I was looking at Aave recently, and it just like doesn't really seem like your borrow rate is that dramatic. With at least the dominant stablecoins, you may be able to go down this list, to some of them that are less prominent, and you might be able to get higher yield on them. But for the safe ones, for the ones that are actually transacted en masse, it's just like not that competitive of a market to stake them, unfortunately. So what does this mean? What does this mean? If all of that money is being printed into stablecoins, if more and more money is being printed into stablecoins, well, it's going to Bitcoin. But why isn't it going to Ethereum? Ethereum is where a lot of these are on, and it's multi-chain now, so these exist on multiple chains, not purely just Ethereum. But I think that's something that we really need to take into account and remember as we're thinking about this narrative of, when the stablecoin volume explodes, as it continues to explode, how is it going to affect Bitcoin and the other assets? So if we want, let's go take a look at a couple of the other assets. Take a look at good old XRP. I don't know what the hell that was. That's not what I wanted to press. So very similar, like why that chart looks terrible. I always feel so bad for anybody who invests in XRP. That chart looks terrible. Like sure, maybe it recovers and it continues now, but it looks so heavily manipulated. It just does not look like a healthy recipient of any of the money that's flowing into the crypto markets via stablecoins or anything else. Here's BNB. BNB looks a little bit healthier, certainly more healthy than Ethereum. But this is just like BNB is only like has so much demand because of how many people are using Binance. So it does facilitate something, like it is doing something. Solana, let's go see what Solana has in terms of how it's been affected. So very similar to BNB, where it's kind of like right at the market cap highs of where it was. It's pumped, but hasn't really been relevant. Even recently, the market cap of Solana has pumped pretty dramatically from where the price was actually doing well. The price was in highs over here, and I believe over here. So the market cap does seem to be moving a little bit, but again, very different to good old Bitcoin, where it's just more clear that it's up and to the right. Like that's a more clear trend than anything else we have on chain. It's even affecting things strangely like Circle itself. Where is it? Now, this isn't one that I follow that frequently, to be honest with you, because it just doesn't really make that much sense. Oh, see, there you go. Now it's probably the time to pay attention to it. So when this first came out, and for those of you who don't know, Circle is the company that owns USDC, which is, again, number 2 only to Tether in terms of the stablecoin market. So when it first came out, there was a bunch of hype around it, and the price exploded, and went up only for a while, and then has apparently peaked. This is not one that I've been paying attention to. And it's gone down in value. And I would imagine that's partially because people realize, oh, okay, well, this company is not going to be not going to be a linchpin in whether or not the stablecoins of the future continue. And I think this is something that people forget. This list is going to look really different in 2027. JP Morgan Chase coin, Citibank, Wells Fargo coin, like that is going to be what it looks like 2027, 2030. It's going to be like big competitors that may be built off of some of the rails for these. But, even this is, I believe this is the Trump one. another one that I don't pay attention to that much, and that's still so small relative to this. So really the ecosystem is just going to open up to other competitors, and this is Circle. They still have a healthy distance between them and all the smallest competitors, but we're at the point in the market where people were behaving irrationally and putting money towards a company that like literally they issue stable coins, and they're not going to be the sole issuer of stable coins. So anyone who's making that same mistake of, they're wanting to bet on one company or on, like, for example, this is why a lot of people like XRP is because, Ripple has the ability to create stable coins. That's so small, just barely more than $1 billion. And again, in a $300+ billion pool. I think people really underestimate how much money is going to flow directly to the banks because it benefits them to use their own coins instead of using, something that is essentially controlled by a US company. Why would all of the banks on the planet choose to allow a company like Circle to have control over their asset flows instead of creating their own? It just doesn't make sense. So for that part of the video, that's really what I want people to wrap their heads around. It's just the fact that there's going to be increasing competition for these stable coins moving forward, but there's still two clear winners out and ahead. DAI used to be more relevant. It really hasn't been in a while. Sky, I'm actually not positive. USDS, I've heard a little bit about it, but I haven't heard enough. I just know it's like more used in DeFi, I believe. But this is the other one that I think is pretty important to pay attention to. And PayPal as well, I think, is one that over time, as more demand comes from global customers for stablecoins, it's not going to be trivial for some of these companies to already have a leg up because this total market cap is just going to explode. That's going to be in the trillions in the next couple of years. Whereas something like Solana is not going to be in the trillions necessarily. Ethereum is not going to be in the trillions. It's at only $50 billion more dollars than there are currently in all of stablecoins. And I really think that that's something that people are misunderstanding about what's actually going on, which leads me to the national debt clock. And this is the point of the newsletter. I was talking primarily about